Well, we obviously want to hear what he's thinking for the future. Everybody's expecting the 25 bips cut, but we'll see what he thinks in terms of December and what he thinks in terms of inflation and labor. Those are the two key things. And so lots going to key off that in terms of where we go. I think for now, the AI play is strong. You've got huge consumer spending, some 40 to 50 trillion, and wealth has been created since 2019. So next year looks good. So I'm not even so sure we need to have clarity on how many rate cuts for next year, given because I think earnings look very strong and the guidance has been very strong.
Tim, what do you think?
Well, and I think the lack of clarity gives the Fed an ability. I mean, Powell could actually really punt on December language, and it doesn't mean he won't give some guide. But
So
my
let's break
inclination
this
is
down.
if you've got a 90% priced in on December, I think there's the risk that you could be disappointing.
Yeah, because
I think over the next couple of days, I think you could bond markets
Recording in
and rates could
progress.
give a little something back. I think we've priced a lot of this in, and I've as stated earlier, I'm generally very constructive on the market here. We've had a 15% move in the S&P since the other side of the V. In other words, we've had a massive move in markets, and we've priced a ton of Fed in, not just a little. So
So
fight the Fed.
in 10
I think
minutes,
this Fed,
we're going
at
to
least
get
that's
the
intact
rate
for
decision.
the
So
next
the
6
numbers
months
is going
or
to come
more,
out, all right?
is
But
going to follow the course they have. They don't have to
most
go to
likely
December,
the
but if
focus
anything,
is going
I think
to
just
be
watch for more caution
on
out of December.
The last few moments, just a few
so
seconds
that's
left
when
here.
Jerome
Favorite part of the
Powell
market right
actually
now?
comes out. He is going to give his
I tell
little
you,
testimony
it's not a
speech,
big
and
weighting,
then
but
the
I really like
Q&A
what's
is
going on in
usually where we
commodities.
get
I like
the
what's
better
going on in
moves,
integrated
okay?
miners.
So
Again, I
just be
talked about
prepared for
copper.
that.
I think industrial metals.
What
I think
we have to
defense
look for
spend
initially
build out
at 2
around the world,
a.m.
whether it's
is
Japan or
if
Europe.
we get a
I
surprise,
kind of like
right?
that part of the market.
So
Industrials
markets
have
is
led
already
the S&P all
expecting
year.
a cut.
Barbara, what do you think?
But
Still the
if we
AI
get a
chips,
pause,
NVIDIA,
that would be
Broadcom,
initially that would just
TCM,
cause
TSM. So
strength in the
Okay,
U.S.
so heading to
dollar
the Fed.
downside
Thank
in
you guys
equity
both
markets
very much
right
for
away.
breaking
That's
down all with us right now. Barbara Durant and also Tim Seymour, thank you very much for that. Now, that does it for the exchange. We're just a few minutes away from that big Fed rate decision. I'm going to see you on the other side of this break on Power Lunch for the entire Fed breakdown.
We get
Keep it right here.
something
We'll see you after
surprising
that.
there, where they're talking that inflation is higher, they're concerned about inflation, or if they show any concerns of the government shutdown impacting future decisions. If they do that in a statement, we could possibly see reactions immediately. Also, if there is like another thing could be if they're talking about
the day's top stories driving Wall Street.
And I'm going to go through this list as well. If they talk
Kelly
about
Evans,
the
Brian
quantitative
Sullivan,
tightening,
Power Lunch,
right?
CNBC.
If they show that they're going to continuously...
Welcome to Closing Bell. Let's get into the market right now.
Breaking news. Market moves.
What it means for your money in the days ahead.
Scott Wapner from the
All right, it should be good now. Yeah, so if they stop QT, right, that's going to cause most likely for equities to push lower because they're expecting the end of quantitative tightening for this meeting. So if they show the opposite of that, that could cause equities to push lower. All right. So that's just like a brief thing to focus on right at 2 p.m. just in case. All right. But other than that, like I will go through this afterwards. Let me just look at the areas of interest just in case. Right. Because we don't know. I'm expecting them to cut rates by 25 basis points, and we're just going to see the same type of statements over and over that they pretty much say for every rate decision. I'm not expecting at 2 a.m. to give us like immediate moves, but it could be something for us to, focus on. Yeah, for you guys that's watching on IG, it's probably going to be best for you guys to go on YouTube. All right, just so you could get a better view. But looking at the dollar, dollar has been range bound for a while, definitely for this meeting. Typically, like trading, dollar pairs could be good if we get a clear bias, right? Because we could also focus on the yields. So let me just, I'm gonna just do the areas of interest to focus on too. Like I know you guys like equities. Equities could be a good option as well, depending on the meeting. So when we trade rate decisions, what to focus on is, how is the language? Is the language of this meeting hawkish or is it dovish? That's how we look for our opportunities, by understanding if they're talking about cutting rates in the future or they're not. That's pretty much the tone of what we're going to be paying attention to. All right. How do you get their basis point amount? What the rates, I'm gonna show it in the, just like how we look at data, it's the same thing. Like we're gonna see if they cut rates by 25, if they cut rates by 50, or if they leave it the same. It's the same way. Like we want to see a 25 basis point cut than what they expected. If they leave rates the same, that's where we're going to just get an immediate hawkish reaction, right? But usually what's like with this decision right now, we typically see them cut rates by 25 basis points. And then, you know, we pretty much just have to wait the 30 minutes for Jerome Powell to come out and speak. And then we're going to listen to his testimony just so that we could capitalize on an edge. All right. So we could get a clear picture of what he's saying, that we capitalize on it. Okay. Hopefully he gives us an edge. Like that's what we have to really focus on, is hopefully he gives us an edge. Hopefully he intentionally tells us what their path is going to be in the future. That is what we want in order to capitalize on a really good opportunity. I feel like because this is like the end of his cycle, right? Like he's going to obviously be out the door next year. So I'm expecting him to he probably will give us something, right? But if he doesn't, I'll be pretty shocked. But usually he is good at keeping us very neutral because their goal is market stability. Okay. So that's their overall goal. So Powell is very good at saying a hawkish statement, then right after saying a dovish statement, right? So that's why trading while he's talking is extremely complicated for a lot of people. Some people get caught up thinking that, oh, he says something hawkish, like what's going on? And then he covers it up by saying something actually the opposite. And this is why we could get caught in those whipsaw price action moves. So like we're going to go through this with stages and I explain the rest after. Okay. So you can see here, right? They're expecting to cut rates. So if we see the forecast of a 3.9, so it's usually a 3.75, right? So it's usually a range. But if they cut rates by 25 basis points, it's already expected. So I'm not really expecting much from that. I put it right here. Yeah, sorry, because y'all guys can't see. Yeah, so if he cut rates by 25 basis points, right, it's expected. So we're not going to expect much from that. But if he, let me just show this real quick so I can have my other calendar. If they leave rates the same, we're going to see it's going to be aggressive moves. It's going to be following the green arrows. All right. Green is hawkish. The red is dovish. All right. So that's the direction. But the breaks of structure is what matters the most, guys. So we got to focus on the breaks of structure. Okay. So that's what we're going to focus on now. And then afterwards, we're going to focus on the statement. Okay. So that's what we're going to pay attention to. We got about 30 seconds. I'm typically leaning more towards the press conference, right? But it's a possibility that we could see this. We could see him. It's a possibility we probably have to wait for the press conference, you know, in order to get a real direction. But first, let's see what happens here. All right, we got 10 seconds. Let's see if we get a 25 basis point cut, but it's going to be more focused on the forward guidance. And I'm going to run through the headlines as they come out because it's going to be pretty quick. All right. So 3, 2, 1. All right. So they just cut rates by 25. So as expected. All right. So now we're going to go through the statement and let's see what they say that could cause us. Right here, the Feds to conclude aggressive balance sheet drawdown on December 1st. So that's the end of QT. So that should be a little positive, but let's see what happens. December 1st, we'll reinvest all mortgage-backed securities, principal payment into treasury bills. Let's see if there's anything else. No, they cut rates by 25. Okay. So we're going to go back to, we're going to see what happens so pretty much everything that's here, Jerome Powell is going to explain it. And that's what's going to be the edge. All right. So we're going to focus on that now. Yeah, she just means what just happened now. I'm pretty sure that's what she means. Like, it's just in the data. Like, it shows that. Yeah, the calendar will show you. So as you can see, so far, nothing happened because what we got so far is expected. So we're going to want a surprise. And usually the surprise is going to come from the press conference. That's where, you know, hopefully, you know, right now we got stronger dollar, stronger yields. So that's pushing gold lower. But we're not seeing the reaction in equities. So that's also, to me, a little alarming. So I'm going to just be a little cautious and see what happens with the press conference. If you guys have questions, don't hesitate to ask. Let me just read through I'm going to read through the statements first. So the Fed said they're the reason why the markets ain't reacting because they said they're shrinking the balance sheet is because it was already expected. Yeah, I saw the reels that I did the markets has already expected this to happen this week. They just confirmed it. Okay. So that is good for the stock market. But remember what I was telling you guys, right? They already pre-planned this. So this is not a surprise that they're December 1st, they're going to shrink the balance sheet. So they're going to stop QT. So that's not a surprise. Okay. So, but it's good for the stock market overall, but it's not a surprise. They already pre-planned for this. So that's just to help you guys understand, like, trading a surprise compared to what's expected. So they was already expecting this. So that's why, like, right now, no real reactions. Does that make a sense? Just put a 1 if that makes sense, guys. If you have questions, don't hesitate to ask. So we're just going to wait for Jerome Powell at 3. But I'm still reading through everything, though. Inflation has moved up earlier in the year and remains somewhat elevated. So that's probably why we saw the strength of the dollar in the yields, because of that comment that showing higher inflation. And I'm going to go through the cheat sheet with you guys in a few so we could actually know what to pay attention to in order to get a reaction. So saying that there's higher inflation is hawkish. Okay, so that's why we're seeing the strength in the dollar and the yields, right? So right here, you can see this comment. Uncertainty about the economic outlook remains elevated, right? Inflation has moved up since earlier in the year and remains somewhat elevated. This is hawkish. So this is why we see the yields to the left is spiking higher, and then we see the dollar spiking higher, right? We see if equities break lower, that's going to most likely be because of this comment. Them saying that inflation is higher, that means that they're expecting pretty much to pause interest rates. So that's pretty much what that means. Yeah, I got the thing is coming out too. Well, Bella, that's why we're going to go through the course. It's a good question. She said, if they're stopping QT, wouldn't that weaken the currency more? They already expected that, you know. So we look at I don't want to mess up the areas of interest, but that's why we look at the higher time frame. Dollar has been bearish this whole time because they was expecting that to happen, you know. So now they're finally doing what they expected. So what's going to weaken the dollar is once they start QE. When they're going to start QE is going to be the focus. All right. So quantitative easing, more stimulus, equities push higher. That could cause dollar to push lower. But them saying that inflation is still elevated is not a reason to sell the dollar just yet, because the currencies is impacted by interest rates. So they're cutting rates, but cutting rates is already expected. But if they are cutting rates because they're cutting more aggressively, that's a different tone. Then we short the dollar. But yes, QE, once they start QE, that should push dollar weaker. And more aggressive rate cuts in the future, that should push dollar weaker. But saying that inflation is going to be somewhat elevated, that's not a really good opportunity to sell the dollar right now. So that's why we see the dollars pushing up, equities is pushing lower. Like if y'all taking a trade, you know, if y'all taking a trade on equities, it's because of that headline. It's because of higher inflation, right? But I think that was pretty much a surprise, him saying. I think that was a surprise, you know, saying that inflation is somewhat elevated. I think that's a little shocker right there. Yeah, they're coming in now, a little delayed. What was your question? It says gold is a hedge against inflation. That inflation comment should be bullish for gold, right? Well, yeah, yes and no, because like in this current situation, right, the markets is heavily focused on what the Feds are going to do with rates. So if they're expecting inflation to rise, yes, as a commodity, yeah, gold should push higher, that's why like the overall bias for gold is still bullish, right? I don't think this is going to cause I think the way we're looking at gold now is totally different. it's more of a hold for a lot of people than anything else. But it's typically what's going to happen with the dollar. That's how I would react to gold right now. Just focus on the dollar. All right. Sorry, let me just read through the rest. Yeah, and I could put this in a group too, guys, so y'all could just see like how they do it. So like it's pretty much like they look for changes in their statement, in their words. Oh, there's two descendants too in the Feds. Yeah, so there's like two. I believe there's like two descendants. So it's like two members that's expecting a pause. That probably is against cutting interest rates. Yeah, I just want to make sure I got everything before I move forward. Yeah, so yeah, there was a vote. So it was 10-2. So all right, so the vote favor policy was 10-2 with the Governor Myron, which preferred a 0.5% of a cut, and then also Fed Sherman preferred no cut. So that's what happened. Okay. So 10 of the Fed members voted for a 25 basis point cut. It was two descendants. One was Myron. He wanted a 50. Well, that's Donald Trump's hitman, right? So we know that. And then Sherman wanted a pause. So it would have been different if we would have had two members voted for 50, then that would have been a dovish reaction. But we had two descendants going into both directions. So that's why like now we just wait for what Jerome Powell has to say. But no reaction. I'm waiting for the statement. All right. Read your questions. And then we could watch it together. This is so interesting. They choose QE, which should weaken the dollar, but inflation is also elevated. They didn't start QE. They're just ending quantitative tightening. Like we're in a transitional phase. So like that's why we're at the next stage is QE, but they're like that's what I was talking to you guys about the cycle, right? We have time, so we got 30 minutes for the rate decision. So this is what I'm talking about, the cycle change, right? So we're at the ending of quantitative tightening. So the next stage is obviously rate cuts and quantitative easing. But in order to get the QE, something has to break, right? They just can't stimulate the economy for no reason. Make sense? So like they can't just throw money into the economy for no reason. When you look in history, what was the reasons why they stimulated the economy, right? It was always a disaster. It was always like COVID. It was the banking sectors are failing. Banks were failing, right? It was always the housing markets, right? So something has to break in order for them to do QE. So they're not talking about that part yet. So like dollar's already pushing lower because the reason is they know that this is going to happen because of the U.S. debt to GDP ratio. The U.S. owes too much debt that they cannot pay with the way the economy is being ran right now, because now the consumers, us, is taking a huge hit because of high interest rates. Make sense? So when you're an institution, you know the Fed's next step has to be rate cuts. This is why we've been seeing equity markets hitting all-time highs. Dollar's been pushing lower this whole year because the next step of the cycle is eventually QE. They can't hike rates, because if they hike rates, then they're definitely forcing a recession. The only thing they could do is keep rates where they are or cut eventually. So if you know that somebody's back against the wall and they could only move forward, what do you think the next step is going to be moving forward, right? So that's how the banks stay ahead all the time. This is why JP Morgan knew, hey, this meeting, we already know that they're going to start QT. Make sense? Put a 1 if that makes sense. Right? So that's how you know, like, nothing is a surprise. All right. So that's why it's important to pay attention to this information. Exactly, Leo, because you're reading the book. So you see this as a never ending cycle, right? So like the next step, right? Guys, we have to like, hey, we're having a problem with your government paying us back our loans. So the fact that your government sucks at paying us back our debt, in order for us to get our money back, right, we're going to have to make your cost of life miserable. One sec. All right. So we have to make your living situation extremely bad, where you're not going to be able to work because we're going to cut all the jobs, right? We're going to make inflation extremely high for you, so you can't afford your food. They can't tell you stuff like that, right? In order to make things better for us, we have to make the situation worse for you, and then we fix the problem, right? So they fix it by quantitative easing, right? By stimulus, but they need a problem that happened before they could do that. Make sense? So they can't just randomly do it. They need something to break first, right? And then they could say, hey, we're coming to save the day. Here's money into your economy. So now people could take out more loans. People could start building businesses. People could start taking debt. People could start buying homes, buying cars, because now the government could use that tax money to eventually pay off to pay the Federal Reserves back, right? So they need a problem, right? So that's the whole cycle. So that's what we have. That's why, if you're not paying attention to this information, you're lost in the sauce, right? This is why when things happen like a disaster, people focus on the problem, but they don't focus on why they're making that problem happen. That's why the transfer of wealth always happens when people are scared, right? When people are running away, like COVID. People was struggling, but how come banks and billionaires became more rich and people got more poor? Was because they used those opportunities to buy from people that were losing. Exactly. The shutdown is an excuse. I mean, like, we all live the same life. Like, people are getting sick. People till this day still getting COVID and still going to work. So what was the difference between today and then what happened in the past? People still get COVID today. Where are people dying? Like, where's the numbers of people dying of COVID? Like, when you wake up, you'll realize that this is just a whole system that they've been playing against us. Make sense? Like, you probably got COVID and still went to work. So it's just they needed an excuse, right? The lockdown of people not going to work was the excuse. They sped up the recessionary state they sped up recession by causing people not to work. So when people can't work, that forces them to do QE. Make sense? Because when people ain't working, you can't pay for goods. So that's when they did quantitative easing, and that's why inflation rose. So they just sped up the cycle that usually takes 20 years. It happened in like five to 6 years. Well, yeah, it happened in 5 years. So they sped the cycle, but the recession was faster because people wasn't working. So we had 2 GDP failures during Biden administration, but they changed the definition of a recession. So we had the recession already. It just didn't feel like it because people was going back to work. You get what I'm saying? So when you understand that stuff, Ro, I'm waiting until right now it's a hawkish reaction, stronger dollar, weaker equities, only because they said inflation is higher. But I think we're going to get really big moves from Jerome Powell speaking. So it's best to wait until after. I think is waiting until Jerome Powell speaks. I think it's the banking sector this time. I think it's going to be the banks when it comes to loans. I think I believe right now the problem is auto loans is the problem right now. That's what's creeping up is auto loans. All right, so we got a few minutes. Yeah, Silicon Valley was exactly. Like Silicon Valley was that was just stupidity. My opinion, I think that was just stupidity. It was just bad investments. Like they made bad decisions. All right, so now let's go over the scenarios on what to expect. Was that good information though? Like so far, was that helpful? Am I still stuck? Yeah, let's see. I don't think he's speaking now. No, he's not speaking yet. Test. Yeah. I'm not? I should be. Yeah, it should come up. All right. What do I propose if you could please? It's frozen? Yeah. On Instagram? Yeah. Shit. All right. Yeah, Instagram is frozen. Well. What do I propose? Could you please list the examples of what you think would break into Discord, please? Yeah, I think it's auto loans. We could talk about that after the call. We could put in like things. We could look at things that like they're gonna let us know, obviously, but I think it's gonna be the banking sector. Could we start hearing from Powell? Would go good a better? Yeah, most likely. Everything should probably move. Yeah, I know. I'm probably gonna stop doing that too, because I don't feel like there's no point to watch it there. Just go to my YouTube. But I understand like people like the vertical thing and the swipe. All right, I'm gonna start it up again. Yeah, we got time.